I think the negativity regarding emerging markets is not justified and is not backed up by numbers. If the world economy last year grew by 3%, 1.85 percentage points of that were emerging markets. In the absence of emerging markets, we would be operating very close to recessionary levels. So why are people so negative about emerging markets? I think there are three reasons behind that. First, there is a perception that China is facing a hard landing. Second, the Fed hiking interest rates. And third, the rapid drop in oil prices. And I think these three factors will turn much more positive for emerging markets in 2016 and 2017. I don't think the Fed is in a position to hike interest rates much further. It's done and it's already priced in. And when it comes to China, the economy is rebalancing. The economy is slowing down indeed, but it's operating at much more sustainable rates of growth. And I do expect China to grow around 6.8, 6.9% in coming years. And with China being the second largest economy in the world, these are exceptional rates of growth. When it comes to oil prices, I think fundamentals are not sustainable and consistent with the prices we're seeing today. At current prices, supply cannot stay at these levels. I expect to see a supply crunch in 2016, which will push oil prices rapidly higher towards year end. I would not be surprised at all if oil prices approach $60 to $70 a barrel before the end of 2016. So I think it's very important to differentiate. There are lots of differences between countries, region, and even sectors. I think that Southeast Asia, the ASEAN region, would be the top performing region in the world economy in 2016 and possibly next year as well. When it comes to Africa, there is some negativity following the rapid drop in commodity prices, and there are indeed challenges in 2016, but we should still differentiate in that continent as well, and we should be looking at the opportunities. And the opportunities will be related to the rising middle class in Africa and the very favorable demographics. And when it comes to China, the second largest economy in the world today, we need to look at the changes that are taking place in China. Yes, headline growth is slower, but at the same time, the drivers of growth have changed. It's not just about manufacturing anymore, it's also about consumption, which is rising, and it's also about the service sector, which is getting stronger and stronger.